We recently conducted a poll to gauge the outlook of construction executives for the civil construction market over the next 12 months. The results reveal a mixed bag of expectations and sentiments, reflecting complex factors influencing the sector today. Here is the detailed breakdown of the findings and an analysis of what they might mean for the construction industry moving forward. Hi, I'm Taylor Maurer, founder and senior managing partner for Heavy Civil Resource Consultants, a retained executive search firm for infrastructure construction and engineering. Now, at the end of every quarter, we ask construction executives, what is your outlook after this quarter for the civil construction market over the next 12 months? And here are the results. 19% thought that there would be strong growth, 41% predicted moderate growth, 35% foresee the market stagnating, and 6% think we will see the market shrink. Now, to provide context, let's compare these results with those from the previous quarter and the same period last year. Last quarter, 24% expected strong growth, 42% thought there would be moderate growth, 28% expected stagnation, and 5% thought the market would shrink. Last year, 26% foresaw strong growth, 42% moderate growth, 22% the market stagnate, and 10% thought it would shrink. So, what does this mean? The data indicates a slight shift towards a more pessimistic outlook compared to both the previous quarter and the same period last year. The percentage of executives predicting strong growth has decreased, while those anticipating stagnation and shrinking have seen a slight uptick. Now, this quarter saw only 19% of respondents predicting strong growth, down from 24% last quarter and 26% last year. This decline suggests a growing caution among construction executives. The 35% expecting stagnation is higher than the 28% from last quarter and 22% from last year. Now, this shift indicates a significant number of executives believe the market might hit a plateau. While the percentage foreseeing a shrinking market remains relatively small, it has increased slightly to 6% from 5% last quarter, though it's still lower than 10% from last year. Now, despite the more negative outlook, several factors suggest a disconnect between the market conditions and executive sentiment. Since our poll ended, so much has happened. The stock market is performing exceptionally well, which typically signals economic strength and investor confidence, with the Dow cresting over 41,000 points for the first time. Most think this was a proponent of the Federal Reserve expecting to lower interest rates, which should stimulate the economy and investment, especially in the private sector. The construction unemployment rate, its lowest all year, currently sitting at 3.3%. This suggests a strong demand for labor and ongoing project activity, and 27,000 jobs were added in the construction sector in June, according to the AGC. So why are we seeing a more pessimistic outlook? Well, with an upcoming election, political uncertainty may be causing some executives to adopt a more cautious outlook. Historically, elections can lead to temporary market volatility and a hesitancy in business decisions. Not only that, but since the industry leans heavily towards the Republican Party, there was just an assassination attempt on Donald Trump, who has just accepted the nomination, but has been the clear candidate for some time now. Now, some respondents might feel that the market has reached a peak some time ago, with interest rates were at an all-time low, and anticipate a natural downturn is on the horizon. Now, this sentiment could be driving higher predictions of stagnation and a slight increase in expectations of shrinking. While the current sentiment appears more negative than previous periods, it's important to remember that market predictions are inherently uncertain. The actual performance of the civil construction market will depend on a myriad of factors, including, but not limited to, economic policy, global events, and technological advancements. Now, right now, there still appears to be a lot of federal money flowing for infrastructure development from the IIJA. Despite a cautious outlook, there's still reason to be optimistic. The record high Dow and low unemployment rate are strong indicators of an underlying economic health. Furthermore, interest rate cuts are typically designed to spur growth, potentially reversing some of the current pessimistic trends that have been affecting the private sector. We would love to know what your thoughts are regarding this. So please leave a comment below and engage in our polls and let us know what you think so that we can share your thoughts in future poll results. Stay tuned for future updates as we continue to monitor the pulse of the civil construction market and provide insights into emerging trends and developments. Thank you. Bye.